Today's Ankerstar Wealth monthly, or not monthly, daily meeting. Feels like it's been a month because we were out for a few days, or at least I was over at a conference. Today, we're going to hit Fed rate cut, 0.5 point. We're going to talk about that. We're going to see the market reaction this morning, which was kind of a delayed reaction. Corey's going to talk a little bit about what markets do, at least in the short term, on rate cuts. And then lastly, I'll close with Amazon bringing people back to work and maybe what that might mean for all of us later on. But before we get started, I'll remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So here, let me share the screen and I'll show you this exciting news here. You know, it's exciting for us in the finance world. I kind of think back to my time when I was really just in a big corporate entities, and I obviously looked at my portfolio and did investing. It wasn't as exciting back then, but for us, it's like, oh, is it going to be a 0.5 point? Is it going to be a 1/4 point? For the longest time this year, we thought there was going to be no rate cuts. As inflation was trying to be caught under control, but and then in the last couple of weeks, it was like, oh, this is like 85% chance it's a 1/4 point, and in the last like 5 days, that thing shifted all the way up to over 50% chance that it was a 0.5 point, and that's exactly what it was. So the Fed slashed the interest rates by a 0.5 point. Couple things you can read into that. One is inflation. I don't want to say it's under control, but it's certainly very close to being under control. Close enough that the Fed feels comfortable with this. So they would not have cut this a 0.5 point if inflation was still trending up. That's good news for all of us. The other side of this is, the other part of the Fed's mandate really has to do with joblessness and that situation. The economy is slowing. I think we can all agree on that. It seems like we're going to have this soft landing where we don't go into a recession. I do know the jobs number is ticked up to 4.2, 4.3% unemployment rate. And for those of you that are listening that are looking for a job, I want you to find one where it can be concerning. It's what is it? It's not a how's it go? It's not a recession until you lose your job and then you really feel it, and that's painful. And I know what that's like. So good news. It's a 0.5 point cut. Let's see what the market's doing. I'm going to show you one real quick graph. This shows the projected rate cuts after this into 2025, 2026, 2027. You can look at the black line and see it obviously going down, nowhere close to what it was the last several years since COVID. And those little circles are just showing that there's 9 Fed officials, and they kind of look at the average across them, and obviously the further time you go out, the more variation there'll be in projections. So anyways, I believe our Fed's doing a good job. I mean, some people would say since they had to cut it a 0.5 point, maybe they should have cut it a 1/4 point last time and then a 1/4 point this time. They chose not to, so still doing a good job. So let's look at the market reactions. Markets are up huge today. I mean, huge. I mean, there was a surge yesterday and then a sell-off back to break even, a little bit below. But S&P's up 1.8%. Nasdaq's up 2.8%. That's huge. Russell 2000, which gets out to the smaller cap, 1.6%. And the one that shows in red is volatility, so that means volatility is going down. That's actually good. I'll just show real quick because some people were interested. Bitcoin up 5.25% today, so that's a good sign too. So I really like that. I would have wore my green shirt, but I think it's in the laundry already. So with that, I'm going to turn it over to Corey. He's going to share his screen and kind of show you what the markets do on these rate cuts.
Thanks, Mike. Yeah, so this shows you when the market gaps up 1% or more after a scheduled Fed day, how does the rest of that day kind of play out? So you can look, this goes, and of course there's many other Fed meetings that have taken place in the last 30-ish years on this chart. but this is just looking at when the market gaps higher. So you can see most of the time, almost all the time, it does hold green for the day. Only 2 times did we get a full reversal into the red after that large gap higher in the morning. If you look at the change, like the basis point change, there's only one other 50 basis point change that sparked a 1+% gap higher the next day. That's that October 2008 cut. That's kind of a famous cut, much more famous than the one today will be, because that is the cut that took rates to zero. You know, the infamous zero rate environment, and they held rates at zero for too long. There was so much cheap money out there for like a decade or so. So that was the cut that 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 took rates to zero. So pretty interesting there. Of course, the cut here, we're starting at 5%, and bringing it down there. Well, how will the rest of the day play out? Currently we are above the gap higher. So we gapped up 1.63%, and we are at 1.8 now. So it's holding and even stronger than the open. So I'll turn it back over to Mike here to wrap it up.
Okay. Let me share my screen again. So I saw an article a couple days ago, and I just thought it was an interesting one to bring up, because and this one's not like day-to-day market things. Amazon tells employees to return to the office 5 days a week. So Amazon's one of the, obviously the big, I don't even like to say Mag 7 anymore, but the top 10 stocks, big holding for us as well. Believe in Amazon. So, is this the beginning of a new trend? I remember the COVID, all work from home. It made sense. A lot of tech people can work from home, things like that. But here's Amazon bringing everyone back. They had everybody back 3 days a week in the office, and now they're bringing them back to 5. And, I just bring this up because I'll be interested. There's a couple ways this could play out. One is other tech companies are like, yeah, hey, we work a lot better face to face, sitting in a conference room, going over things, sharing our screen, sharing things than we do virtually. That may be one way. Another way could be other tech companies are like, we're not going to do this. And the Amazon people that don't want to go back in the office hop from Amazon to Meta or Apple or wherever. They could hop, change jobs. So interesting trend to watch as it moves forward. There may be some investing theses in here, as far as, maybe the corporate travel is going to go up. Maybe hotels will go up. Airlines may go up, but I'm not sure we're going to put any money in there, yet. But anyways, just a trend, and it'll be interesting to know, if anybody's on this video or watches this and wants to leave a reply back, are they changing your status? Or have you always been in the office? Just interesting things to know. Yeah, go ahead.
Mike, I'm at soccer practice the other day, and I'm talking to another parent, and lo and behold, they are an Amazon employee working 4 days in the office, and they had just gotten the message from management the day before. And so I was asking them, were people, what was the talk of the town? And this employee did believe that there was too much bureaucracy in their structure, and that flattening the organization would be better for Amazon. This employee was, a little bit, on the fence about, they liked having some flexibility to be home, but they did feel that that their teams were more productive when everyone was in the office. So, take that for what it's worth. And I forgot if there was one other thing I was going to say, but yeah, it was interesting talking to someone who had just gotten the message. Oh, the last thing was, they thought that this was maybe a better way of doing layoffs, and instead of laying people off against their will, they gave people, the choice of, do you want, if you want to accept this change, it's your choice whether or not you want it. So anyway, that was their input.
That's good. Boy, I hadn't thought about that angle. Like, hey, Amazon wants to cut back on their workforce, so we'll make people come back and some will drop attrition. I don't like to think of that as the reason, but I will say,
I don't know. I don't
there's
know. That was
there's no,
just one of the things we talked about.
there's nothing like face to face, in my opinion. So like working with teams and doing team implementations and I've had virtual teams and I've had face to face teams, and there's nothing like face to face. It's just, I mean, I don't know, when you're on the Zoom call, after a while you just get, I don't even know, the Zoom just kind of, drowns it out. I'd rather be face to face talking. They say by the water cooler. I don't even know if there's a water cooler anymore, but talking on the side, talking at lunch, and things like that. It's just, I don't know, it feels more enjoyable, at least for me. So. Well, with that, I will close. And then, of course, that's why I like that conference I was just at, because I got to talk to a lot of people that I work with from different companies face to face. That's why I like that a lot. So with that, I will close. We will see what the market does the rest of the day. I hope it stays green. I want to see this thing continue and this market take off. Hoping we're not. Hoping we're not in a recession, and then we just continue to see. Remember the shift from the trillions that are sitting in money market as rates come down. Hopefully, the shift into some of the positions that we're in as well. That's it. Well, thank you. Have a good one. Bye.